Welcome back to CNBC-TV18. It's time now to focus on the commodity markets on this auspicious occasion of Diwali. Well, we have seen the whole samvat gone by on a very volatile note. We did see all-time highs for various commodities and then a very strong profit-taking as well. The way we have ended this samvat has been off highs for most commodities, down by anywhere between 8% to 48% on the lower side as well. But how is the new samvat now looking like? What is the next 1 year has in store for us? For that, let's welcome our guest. Ole Hansen is Head of Commodity Strategy at Saxo Bank, and Kunal Shah is Head of Commodities and Currencies Research at Nirmal Bang Commodities. Gentlemen, hi, thank you so much for joining us and very happy festivities to both of you. Ole, I'll start with you, and we're celebrating Diwali in India right now, and there's Mahurat trading happening. People pick stocks or commodities during this day and hope that they give them a lot of profits going forward. For the day today, where do you see a lot of interest coming in?
Well, happy Diwali, everyone. I think we're seeing multiple corners of support and strength still in this market, even though, as you mentioned, we've seen the market correct in recent months. When I look at the forward curve in the futures market, I'm still seeing tightness across most of the commodities, especially in the energy space. But at the same time, we also, I think will be approaching the time where we see the peak level of yields in the US, and from there we will see potentially a weaker dollar, and that really will be a major trigger, I would say, for some of the metal markets at this point. We also see in other markets where there's been really strong support in recent months. Something like coffee has been holding up very well, but just in recent weeks it's had quite a decent collapse, and that is simply because the market is switching the attention away from not so tight conditions to the global economic slowdown. So multiple uncertainties coming in the coming quarters and months ahead. So plenty of things still going on in the space.
Oh, well, absolutely. But I like it. The energy and coffee is what you've spoken about in your first commentary itself. Energy is what we'll start with as well. And your sense on this, Kunal, because we've seen, this one make headlines constantly. Every time we've spoken about Russia and Ukraine and US and US dollar and the weakening Chinese demand. I mean, today as well, the markets are reacting to the weak data that we've seen coming from European Union and China as well. Is the reason there is some pressure in the crude oil prices. What's your sense on how the coming months, quarters could be when you look at energy?
See, right now, oil prices are not able to move up mainly because of the weak Chinese demand. Because of the strict COVID policy over there, the Chinese demand is relatively muted. But from the month of November, the production cut of 2 million barrels per day is going to be effective. And that is going to be bullish for oil. And at some point, like people are talking about Fed pivot, people are going to talk about China pivot, because at some point they cannot afford to continue with this zero COVID policy for a longer period of time. China, remember, consumes roughly 10% of the global demand comes from China. And if Chinese economy opens up, I think the Chinese demand is going to flare up. And above that, we have a production cut of 2 million barrels per day. So we are entering 2023 with a deficit of 2.5 million barrels per day in oil, which is fundamentally bullish for oil. So the only bearish scenario for oil is that US enters into a recession, which doesn't seem to be the case right now. Maybe perhaps 4, 5 months, 6 months down the line, that can be the case. But right now, it seems that the first half of 2023, we are not going to see any major downside. 75 for the Brent seems to be the bottom for oil. And on the up move, it has a potential to test $95 to $100 per barrel. So energy market remains quite tight right now.
Fair point that. Ole, how would you look at the natural gas? I mean, we've seen much of those prices come off its highs. So whether it's US, UK, Europe, the natural gas fears do not seem very strong right now. How are you looking at the months to come?
Well, I'm not wearing a jumper, and that's one of the reasons why. We got a very mild autumn so far in Europe, and that basically led to negative prices briefly today in the next hour gas price in Europe. So a complete turnaround from what we've seen in recent months. So the combination of strong arrivals from LNG, the demand being cut back both voluntarily and involuntarily, and together with the very mild weather we have, has really changed the situation somewhat. So we're not out of the woods by any means. We need to see mild winter basically over the coming months to ensure that we have enough gas in stocks that makes the next rebuilding phase not as painful as the one we've just been through. If you look towards the US market, gas prices basically collapsed. We're down more than half from the highs. And again, for a change, we actually seen US, not oil producers, but gas producers respond to the higher price we had over the winter. More rigs has been put in place, and that basically means production has been going up at a time where the export capacity has been cut back due to an explosion we had at a plant a few months ago. That will only start to recover late this year, and that obviously will support the global market, but it still probably keep prices low. So at least the gas market is sending some good news to the global consumer.
So some good news that could come in from the gas prices, at least for the markets. You know, Ole, we were talking about the equity markets before the break, and most experts believe that from here on, these are buying levels and the worst period perhaps is behind us. They did not seem so worried about recession going forward. How are you reading the markets for the next couple of quarters? Because much would depend upon, one, the rate hikes perhaps are factored in, the US dollar. How are you looking at that going forward?
Well, I think that the US dollar is going to peak out in next 1 or 2 months. So I'm expecting that in the month of December, the rate hike in US is likely to pause, because you see what is happening every time with we are nearing the rate hike. So for example, we are nearing the rate hike in the month of November, and already we see a tremors in the US bond market and global bond market. We've seen that happening in UK. We've seen that happening in Europe. So I don't think so that bond markets cannot take this aggressive rate hike. So we are going to see that moment when somebody is going to blink their eye. And I think in the month of latest, I expect that to happen in the month of December. So that is going to be a big moment. I mean, the moment Fed blinks and they say, okay, look, we cannot hike more from here. And we are going to see the tightness which is there in the credit markets right now is going to disappear. And we are going to see some risk on movement after that. And that is going to trigger some, again, big moves in commodities, especially bullions.
Okay. So, Ole, if you were to make a portfolio going forward from here, what kind of commodities would you have in? Is it going to be energy, metals, agriculture, or precious metals? How will you spend your, let's say, $100 within all of this?
Well, I hate to speculate in food commodities, but I think generally if you want to be exposed to commodities, then look for the broad exposure, because we've just seen in some of the data coming out of China now with regards to imports that one of the so-called king of green metals, copper demand, copper imports are one of the few commodities where we're actually seeing an increase year on year. And that just highlights as well that the green transformation will continue to attract increased demand for several key metals. The Russia situation with exports and so on, potentially also adding some support. It was mentioned, I agree with the energy situation. It's not really what crude oil does, it's more what the refined products does. And we see tightness both especially in the distillates, in heating oil, in diesel, and that will continue to underpin the price. And obviously not made any easier by the fact that OPEC plus production cuts are primarily coming from the Middle East. The grade that they produce is perfect for diesel and not so perfect for gasoline. That basically means we are missing those barrels to produce all the diesel that is required. So I like the energy sector as well over the coming months.
All right, so complete buyer in energy there. Kunal, what is your portfolio looking like in commodities?
Well, I think I'm clearly telling all our viewers and everyone who's watching this show, this is the best time you can buy precious metals, gold and silver. They are going to outperform going forward the entire commodity universe. And I think we are going to see a fantastic returns in 2023. Next 1 or 2 months, it can still remain choppy because of the impending rate hikes by US and even by the ECB. But I'm very sure, I'm pretty confident they cannot be aggressive from here. The bond market has already started to show signs of problems. And looking at that, this is the best time to accumulate. Next 2 months, you buy gold and silver, you store it, and next Diwali we will see, conservatively in gold, we are going to see 8 to 10 or 15% return, and silver is going to move up by 20-25%. So very bullish on gold and silver. I will allocate if commodity, I'm making a commodity portfolio right now, a commodity basket. I will give 50% weightage to gold and silver.
Okay. All right. So bullish on gold and silver, and that's exactly what we will talk about after this very short break. We continue our conversation. We'll also have with us Philip Newman of Metal Focus, and this whole focus now will be on gold and silver after this very short break.